considering whether to launch a flagship outlet in Shanghai. Well, to discuss all that, I'm joined by Bundeep Singh Rangar, the chairman of IndusView. And let's start with that story in the Gulf News of all places. It shows just how much what's going on in Britain and around the world right now. They've got, of course, on their front page the story about the Tories and Liberal Democrats continuing their power-sharing talks. And that's certainly weighing on people's minds, isn't it?
Well, it's Monday morning. The markets are looking for a good, sound message of certainty. And the market's been troubled by not only the political circle in Britain, but also the situation with Greece and how that impacts the euro. So I think the market's looking for some strong signal, and hence the horse trading that went on over the weekend to see if the Conservatives and Liberal Democrats could form a coalition.
Well, it's interesting, and the Daily Telegraph newspaper has this story as well. Front page, nation in limbo, it says. Tories and Liberal Democrats seek to reassure City that a deal is close. They want to make the right noises, don't they, particularly about the budget deficit?
Well, I think that's one common enemy, because if you look at the agenda for the Liberal Democrats, it's largely one of political and electoral reform. For the Conservatives, it's a refined approach on economic reform or economic change. So the one common enemy is the deficit, Britain's 77% debt to GDP, and the fact that the government's looking for a very strong mandate from the people to make tough decisions.
And Sally, down in the city, I think you can hear what we're saying, and of course they're watching very closely and examining the newspapers today on what's going on in the UK political situation.
Indeed, I've got the Financial Times here, which is of course for many the choice in the city when it comes to what they're going to be reading when they do get in, and the two big stories on the front page very clearly, of course, the race to see who will finally be leading our country. The Financial Times saying both Mr Cameron and Nick Clegg want to strike a deal as early day to reassure not just the public but of course the financial markets. And then here, of course, all about the EU poised to bolster rescue measures for the Eurozone and Greece, of course. But interestingly, of course, the big news as far as Greece is concerned and what we're up to came through in the early hours of this morning, so none of the newspapers really have the detail. But on the back in the Lex column of the Financial Times, which is where they have all the analysis and thoughts, they actually say for Greece, basically they're looking at their economy shrinking, they're being slashed, and pensions being slashed because of this bailout measure and the imposition of various restrictions and austerity. And then after that, 3 years of that, they still could have a massive debt of GDP to debt of 149%, according to some projections. So although the Asia today are hailing this move, and the euro's going up and up versus the dollar, just as I've been talking to you, it's been going higher and higher. Of course, this is staining. We're out of the woods yet by any means.
Let's pick up on those thoughts from Sally with you, Bundeep. And I noticed the Irish Times is saying this deal had to be done in the European Union, is that fears grow of the global market for sovereign debt seizing up. In other words, it would have been impossible for countries to borrow if they had been put in place.
Well, what's kind of happened in the last 3 years, you've seen private sector debt shift into the public sovereign debt, and now national debt shifting to supranational debt, if you may. And Germany, of course, with 20% of the Eurozone's economic might, is going to rescue Greece, which is of the European zone. The real challenge here is one of making sure this doesn't spread. This can't be the Greece. This has to be something where the finance ministers who've been meeting in Brussels over the weekend have now come with a very strong statement, as Sally said just a few hours ago. I was watching it at 1 o'clock in the morning, saying that we're going to stop this. We're going to put nearly $1 trillion behind this, a combination of EU financing, IMF financing, to really send a message they're not going to let the euro break, because that's a big story here. That's the real fear, is that this is not just about, which, as Sally said, is going from 125 to 149% debt to GDP, but that could affect other, the so-called, somewhat derogatorily, the pig nations, Portugal, Italy, Greece, and Spain, could also go down the same route, and that would have a bad effect on the euro.
What's interesting about all this, though, is the way it's playing into domestic politics as well. We've got this story in the Wall Street Journal saying that Angela Merkel had a poll setback because of the bailout. Obviously lost that regional election, and that's because Germans are not very happy about bailing out Greece. One of the reasons, anyway, is they're not happy about bailing out Greece. What does this tell us about the fact that we've tended to consider the Eurozone as one coherent area? There's been talk about integration, about Europe pulling together, but when it comes down to it, 16 different nationalities in the euro, and they don't always seem very keen about helping each other out.
Varying degrees of economic growth and different characteristics of each economy. So in the past, of course, you could control variances via interest rates that were specific to your country and money supply, quantitative easing, what we've had in the UK. That when it's one single zone. And the federal government in the US has 20% of their budget for pacifying regional differences. You don't have that in Europe. You don't have a budget of that size from Brussels. This is the nearest to that. This is the nearest to a European-wide initiative to put a floor. In some ways, what Germany did with the banking sector 2 years ago, allocate some money to provide liquidity if needed. So part of it is actually buying out bad. Another part of it is actually saying, here is a signal to the market that should there be a need, we will not let this slide. More fundamentally, though, is how do you tackle a larger picture here? Just as I mentioned to BRICS and the pigs, so pigs declined 6.5% last year. The BRICS advanced 5%. That's Brazil, Russia, India, China. The current account deficits vastly vary. You've got almost $1 trillion worth of surplus in current account deficits versus a negative $250 billion of dollars. So on the large level, this is really about reshaping Europe from its stated agenda of being the most competitive place in 2010 to becoming more competitive right now, and retooling it to become an export-driven nation that taps into growth worldwide, not just here. Let's take another example. Look at the banks. In the past 4 years, the biggest banks in the world, which were typically American and British, JP Morgan Chase, Bank of America, Citigroup, HSBC, followed by 3 Chinese banks. So the world's changing, and Europe has to reorient itself towards that change.
It's an interesting thought to Bundeep. Thank you very much indeed for joining us. And of course, that is about us. Our main story is that